Okay, everybody, it's Matt with Down to Trade. It's August 17th, 2023. Obviously, we're done trading for the day. I just kind of wanted to go over our trades for the week. Today is Thursday. We're not going to be trading tomorrow because tomorrow is options expiration Friday. That said, we did trade Monday, Tuesday, Wednesday, and Thursday. And once again, we were profitable on all 4 days. We met our goal on all 4 days except yesterday. I think yesterday was the only day we didn't actually quite reach our goal, but we got pretty darn close. We've been on quite a good streak, win streak for in the Down to Trade room for quite a bit. I think of the last 30 trades that we've taken, we were profitable. We met our goal on 28 of them, so we're doing pretty good. We're going to keep it up the best we can. Obviously, we had to make some changes to our overall strategy since we didn't have such a great month in July. We're still looking great for the year, but the 1 month of July, we weren't looking so good, weren't looking so hot. So we had to make a few adjustments to our overall strategy. And that's when I began what I called or what I deemed the Get Back to Basics campaign. And since we started that campaign, like I said, we've made 30 trades and we've been profitable on 28 of them. And so we've been doing fantastic since we started this campaign. With that said, let's go ahead and talk about this week. Again, today's Thursday, but let's talk about what happened throughout this week. So obviously Monday, August 14th, it was a great day to learn. We did leg into an iron condor throughout the day, and later we took profit on both of those spreads. At about 10:35, we did approach the 44.75 resistance. As we were approaching that 44.75 resistance, price and RSI were actually setting up another bear signal right here. And so I did enter a little bit later. I did enter the 4,500 by 45.30 call credit spread for 80 cents. And then just a little bit later, I did leg into, like I said, an iron condor with a bull put spread. Wasn't much, didn't take very long for that bull put spread to take profit. I took profit at 40 cents on that bull put spread, which means I only needed another, actually I needed to close out for 60 cents on my bear call spread to meet my premium capture goal for the day, which I did. And that's typical situation for us in an iron condor. We don't get into iron condors very often, but when we do, typically, let's just say I need to debit out at, let's say, $1 for me to reach my goal for the day. Again, my daily goal is 1% return for the day. And that's a 1% return on my entire account. In other words, I can increase my account size by 1%. But let's say I only needed, after I got into my bear call spread and my bull put spread, let's say I needed a debit of $1 to reach my goal for the day. Well, what I would do is I would usually set my take profits on both spreads at around 40 cents. And when one of those gets triggered, let's say one of those gets triggered for 40 cents in this case, then I'll just set the other take profit at 60 cents, and that will give me my $1 debit for the day. So that was pretty simple. Again, pretty nice day on Monday. Then come Tuesday, and again, another really nice day. Price action was coming down to this 44 level, and we were kind of waiting for it to touch down on that. Now, as it did touch down on that level, again, we're here at an interesting level. What happened was we ended up with a nice bull signal here. Now that bull signal is based on divergence. Let's see if I can actually pull it up. It was Tuesday, so you can actually see the RSI. This was Monday. So let's take a look at Monday real quick. So again, this was the bear call spread and then the bull put spread I got into on Monday. But Tuesday, again, as price was coming down, we were hoping for a bullish signal around the 44 level, and it actually ended up happening. Again, that bullish signal was based on divergence with RSI. We got a flat price with a higher low on RSI, and that gave me all I needed to jump into a trade. Got into the at 1040, got into the 4410 by 4380 put credit spread for 70 cents. I had a stop at 250 and a take profit at 30 cents. That take profit was triggered at around just after 11 o'clock at 11:05. And at this point, I only needed to capture another 15 to 20 cents in order to reach my goal for the day. So at 11:21, I did jump into a bear call spread. At this point, I jumped into the 44.90 by 45.20 call credit spread for 50 cents. And a little bit later, I jumped out for 35-cent take profit, a 35-cent debit, giving me a total premium capture of 15 cents on that second. And that allowed me to reach my goal for that day. Wednesday, same type of thing. Remember, the plan we have every single day is the same no matter what. We wait for price to get to an interesting level and we look for a signal. That's it. That's all the magic we have. That's all we do in the down to trade room, but we do it consistently. We don't get scared into or out of a position at any time because we do our best to maintain consistency, discipline, and patience in our trading every single day. And that's what allows us to have such great returns for the year. But let's take a look at Wednesday. So this was yesterday. Let's take a look at it actually on the chart. So taking a look at yesterday, second, I only got yesterday. I only got a chance to capture about 60% of my overall daily goal, but it was a really cool day for a couple reasons. We did have the FOMC meeting minutes looming overhead all day long, and we did end up seeing some weird behavior with the expected move. That expected move was not behaving like it normally does in the first, let's say, hour to hour and a half of the day. The expected move was just acting so strange. I'll give you an idea of what I'm talking about. So we were watching the expected move throughout the day yesterday, and it was having a lot of weird behavior early on. It's kind of, here's what I mean. So what I'm going to do is I'm going to throw the SPX up on here as well. And what we see here is we see a couple instances where price action was actually moving up, and so was the expected move. And as we all know, when price action moves up, typically we'll see the expected move drop, right? Because think about it. The expected move is a good picture of implied volatility. Now, so when price action is moving up, that's typically we see volatility being removed from the market. But in this case, we saw implied volatility going flat, even a little bit increase at the same time the market was moving up. And we were seeing the same type. So what we should see is we should see a divergence between the expected move and price. Price obviously is the blue line, and expected move is the purple line. So we should see a little bit of divergence, or we should actually see some really good divergence between the two as the day progresses. Unfortunately, yesterday we were getting these weird moments where the market price and the expected move were moving in the same direction, which is what caused the hesitation for me to get into the trade. But come around 11 o'clock, what I started noticing that the expected move was actually beginning to behave correctly. And I also noticed that we were triple topping the high of day. At the same time, we were also getting a bearish signal. Bearish signal is bearish divergence or bearish regular divergence. So at this time, it looks like at 11:08, I did jump into a bear call spread. Let's see which one. I jumped into the 44.75 by 4,500 call credit spread for 70 cents. Now, my goal on this one, or my plan, my trading plan, remember, I have an entry plan for when and how we enter a trade. And obviously, on the way up, my plan was really simple. I said, once we get to this triple top, if we get a bearish divergence, we'll enter the trade. That plan came through. once we're in the plan, obviously now we have a management plan, and my management plan was to set my stop at 250 and the other side of my OCO bracket set at 35 cents. That was my plan for this trade. And that's exactly what happened. 35 cents later, or when premium got down to 35 cents, the take profit was triggered and I was out. Now, at this point, I was still looking for another trade. But remember, we had meeting minutes, the FOMC meeting minutes coming out at 2 o'clock. As the closer and closer we're getting to the meeting minutes, the flatter and flatter the expected move began to behave. See that here? And so I just gave up at that point, and I was good with my partial capture of my daily goal. Now looking at today. Again, today was a fun little day. So same type of thing. Early this morning, we were saying that we were waiting for price action to get down to around the 4,400 level, and it was slow to get there, but it was getting there. There were no major news events, no news catalysts that were causing me to hesitate to get into the market. I was just waiting for a signal, waiting for our plan to occur. My plan was to wait for price action, get all the way down to the 4,400 level, and give us a bull signal. It finally did happen at around 11:20ish. After this little red hammer candle, we did get a bullish signal, and right here at what time was that? 11:23. I did jump into a bull put spread. It looks like I got into the 43.70 by 43.40 put credit spread for 80 cents. Now, price did actually go a little bit below the 4,400 level, and about right here, I was considering the possibility of having to enter or leg into an iron condor in order to adjust and hedge the position. However, what I typically like to do is I like to wait for price to give us that pullback. Now today, the pullback did break back above the old support, new resistance, but typically what I'm looking for is that pullback to occur and look something like this. That's the pullback I'm usually looking for. So I wanted to allow that to happen, that pullback to happen, which it did. And on the way back down, what did we get? We got another bullish signal. And that bullish signal was in the form of a lower low on price and a higher low on RSI. So at this point, I was no longer worried about the position. I was no longer telling myself that we might need to enter a bear call spread in order to protect our position. Once this secondary bullish signal occurred, I was no longer even worried about this position whatsoever. So yes, whoops. So like I said, that bear call spread, it began to reverse, and here at around, it looks like around 12:22, my take profit for 40 cents was triggered. At this point, I really only needed another 20 cents to meet my goal. So, waited and waited, and right around here, once again, we were getting that nice triple top. Nice triple top was occurring, and we got another bearish signal. Bearish signal occurred, and so I jumped in real quick at the 44.35 by 44.65 call credit spread. I got it for 60 cents. Now remember, I only needed 20 cents to reach my goal for the day. So I got in for 60, got out for 40, and met my goal for the day. Yeah, that's pretty much it. Now, obviously, for anybody who's following me and for all the members inside the Down to Trade room, you all know that during this Get Back to Basics campaign, we have been taking smaller positions. In fact, I went all the way down to one contract size, and I've been slowly working back to my full position size for this account, which is 10 contracts. Currently, I'm back at 8 contracts, but over the last several weeks that, we've been in this Get Back to Basics campaign, I've been taking really small contract sizes all the way down to 1 contract, then 2 contract, 3, 4, 5, 6, 7, and then today I'm back up at 8 contracts. And I imagine at some point next week, I'll be back to my full position size of 10 contracts for this account. That said, let's take a look at. Okay, so let's take a look at the journal. Now, obviously, we've July 20th, we got into this. Back to Basics campaign, and we've been doing fantastic ever since. I know this is a this one trade, this last trade on the 11th of August. I know it shows red, but that was actually, we exited an Iron Condor for a profit. Don't pay attention to that. That just one, we got out of the Iron Condor all for a profit. So it just so happened this one leg happened to be red, but the Iron Condor that we were in was certainly profitable. So really, we've only had 2 red trades in the last 30. So 28 of our last 30 trades have been nice and green. Everything's been going fantastic, and you can see here, since we started the campaign, we were doing a lot of trades down at one contract, and 2, 3, 4, 5, 6, 7, and all the way back up to 8, and we'll be back up to 10 here hopefully next week. Now, the hope is, well, one thing I will say, if you take a look at our expected return, obviously that expected return, our orange graph here of our actual return, obviously if we had our position sizes at full contract size, this would be much higher, much higher. But like I said, when all of your wins are with 1 contract and 2 contract, it's not going to move your actual return very much. So anyways, for the year, we are at around 34.5% for the year. Now, obviously, again, we did have a nasty pullback in July. That wasn't very fun, but here in August, the latter half of July and here in the first half of August, things have been going, again, fantastic. Again, it just doesn't look very fantastic because our position size is nothing. But again, we'll start to make our way back up, no doubt about it. Anyways, yeah, that's pretty much it from that perspective. Obviously, here in the Down to Trade room, we teach how to trade the 0 DTE options, credit spread options on the SPX, on the S&P index. We do this on a daily basis. Now, there are days that we do decide not to trade. For instance, we are not trading tomorrow, being options expiration Friday. We won't have any trades for tomorrow, but we will be hitting it back up next Monday. But yeah, that's pretty much it. That's our wrap up for the week. Obviously, if you have any questions about the Down to Trade room or our trades or our strategy overall, don't hesitate to hit me up in the comment section down below. Or just you can always reach us at downtotrade.com. Right now, we're obviously offering a killer promotion, 1 week free trial plus a nice discount, and we're giving away a free strategy guidebook. And that strategy guidebook is our strategy guidebook for how we trade 0 DTE options on the SPX. But yeah, I'm certainly looking forward to see how the rest of August goes, and I'll catch you all next time. Take care, everybody. Happy trading.